Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Today, we're cutting through the noise, really drilling down into the most impactful updates from the small cap world. We're talking about recent press releases, the ones with significant financial and operational results. We want to make sure you get the critical insights without all the overload. Think of it like your fast track to the market's hidden gems.
Exactly. And we're not just, scanning headlines. Our mission today is really to unpack the crucial numbers, those drill results, the things that truly empower you to go do your own deeper research. We'll look at what stands out and, importantly, why it holds potential for the future. Okay, let's unpack this. We got 5 standout companies making waves right now. And we'll start in the critical battery metals sector, super important space.
Right. Kicking us off there, first up is Q2 Metals Core. They trade on the TSX Venture as QTWO and on the OTCQB as QUEXF. And headline, it's pretty bold. Q2 Metals unveils major lithium discovery potential at Cisco Project in James Bay.
Okay, so major potential. What are the details backing that up?
Yeah, good question.
Yeah.
Because potential is one thing, but the numbers, well, that's where it gets interesting. Q2 Metals has defined an initial exploration target, and the range is between 215 and 329 million tons. That's for lithium-bearing mineralization. And these are hard rock figures we're talking about.
Okay, 215 to 329 million tons. That sounds like a massive starting point. What about the grades?
The grades are impressive, too. Between 1.00% and 1.38% lithium oxide. Lithium oxide, context is key here. Anything consistently over 1% leaves you on hard rock. That's generally seen as high grade.
Right.
And what's really quite remarkable is that this is an early stage estimate. It's based on just 40 drill holes.
40? Wow.
Yeah.
Seems like a small number for such a big target range. It is. It really suggests the mineralization could be quite extensive, quite continuous.
So what does that mean for the project on a bigger stage globally?
Well, it puts their Cisco project potentially in the world-class category for hard rock lithium discoveries. I mean, just look at some of these intervals they've already drilled. Hole CS24021 hit 347.1 meters at 1.35% Lie-Euro.
Whoa, over 300 meters.
Yeah, and then hole CS25027 returned an incredible 179.6 meters at 1.66% Lie-Euro. And within that, there was a section of 91.8 meters, grading 1.81% Lie-Euro.
Okay, those are staggering numbers, not just the grade, but the length of those intercepts.
Exactly. These aren't just blips. They point to a really robust high-grade system. And this scale, this grade, it could be truly transformative for the lithium supply chain, especially, with the push for North American sources.
That's a great point. And the location, Quebec's James Bay region, that adds strategic value too, doesn't it? Infrastructure, jurisdiction.
Absolutely. James Bay is known for minerals, and it has established infrastructure, roads, power. That's a huge plus. Often overlooked, but critical for viability.
Right. Logistics matter.
And the mineralization is still open, at depth, along strike,
Yeah.
meaning there's potential to grow this thing even bigger, that initial estimate. It's a strong foundation, but with only 40 holes, there's a lot more ground to test.
A very strong start for Q2 Metals then.
Okay.
Let's pivot. Moving from lithium to another really vital energy source, uranium. Our next breaking story comes from Denison Mines Core. They trade on the TSX as DML and the NYSE American as DNN. The headline, Denison Mines expands high-grade uranium discovery at McClean South in northern Saskatchewan. So, more high-grade uranium.
Yes, and when we talk high-grade uranium in the Athabasca Basin, we mean high-grade. The new intercepts at McClean South are pretty striking. We're talking results like 7.51% Euro over 5.4 meters.
Wow, over 7%.
And 3.5% over 11.2 meters. Just to give a bit more detail on those. Hole MCS77, that's the one with 7.51% over 5.4 meters. And that included an even richer zone, 10.88% over 3.7 meters.
Incredible.
And hole MCS80 delivered 3.5% over 11.2 meters, which included 5.81% over 6.5 meters. I mean, these results really reinforce why the Athabasca Basin is world-renowned. These grades are exceptional.
Okay, so top-tier grades, definitely. But what's the bigger picture here? Why is this specific discovery so important, especially thinking about its location?
Right, the location is the real kicker, this discovery. It's right near the McClean Lake Mill.
Okay, and that's significant
because the McClean Lake Mill is one of the world's largest uranium processing facilities, and it has existing capacity.
So proximity is everything.
Exactly. It drastically cuts down potential time and capital needed for processing any future ore from this discovery. Think about it. No need to build a new mill, lower transport costs. It's a massive operational and cost advantage.
Got it. A much faster path to potential production.
Precisely. And this really strengthens Denison's position, especially, with uranium demand climbing for clean energy. Nuclear power is definitely having a moment.
Makes sense. And Denison has, almost 70 years of experience in that basin? That counts for a lot.
It certainly does. Their CEO, David Cates, he emphasized this validates the potential for the McClean Lake joint venture to deliver new sources of high-grade uranium. It's not just geology, it's a strategic piece in that global energy transition.
Okay, a key development for Denison. All right, let's switch gears again. From energy metals now to precious metals, plus another critical mineral tucked in there. Next headline is from Canagold Resources Ltd. Symbols are CCM on the TSX, CRCUF on the OTCQB. And their big news. Canagold's new Polaris project delivers strong feasibility study with $425 million after-tax NPV. Feasibility study that always brings the economics into sharp focus. What's the bottom line?
You got it. The feasibility study, or FS, is where the project economics really get tested. So using a gold price of US $2,500 per ounce, which is, arguably a bit conservative right now,
Right.
The study shows an after-tax net present value, the NPV, of $425 million, and the internal rate of return, the IRR, comes in at 30.9%. Solid numbers.
Okay, $425 million MTV, 30.9 for an IRR at $2,500 gold.
But what about current prices? Gold's been much higher.
Exactly. And that's where it gets really interesting. If you run the numbers using current spot prices, say around US $3,300 per ounce, those figures jump significantly. The NPV goes up to $793 million.
Wow.
And the IRR shoots up to a striking 47.3%.
Okay, nearly double the NPV and a huge boost to the IRR. That's compelling.
Yeah.
What drives such strong economics? You mentioned low capital cost.
Yeah, two key things stand out. First, a very low pre-production capital cost, just $250 million. That's quite low for building a new mine. Second, a really high average diluted gold grade, 9.94 grams per ton.
Almost 10 grams per ton. That's exceptionally high grade.
It really is. Your average mine might be, 1 to 3 grams? So nearly 10 grams means you process way less rock for the same amount of gold, lower operating costs, higher margins. It positions New Polaris to be a low-cost, high-margin operation.
Makes sense. High grade covers a lot of sins, as they say. It certainly helps. And their plan involves multi-stage development using proven lower-risk methods. Keeps that initial capex down.
So definitely looks like one of the more compelling undeveloped gold projects out there. And didn't you mention antimony? That's a critical mineral.
Yes, good catch. Antimony. It's crucial for things like flame retardants, batteries, but supply is constrained, mostly comes from China and Russia. Now, the FS doesn't formally include antimony revenue yet, but Canagold identified over 5,000 tons of it in the mine plan.
Okay, so potential upside there too.
Definitely. It's a potential future byproduct credit or co-product revenue stream. Their CEO, Katalin Kilafliski, he's highlighted the great economics, the low capex, and they're actively working on the metallurgy to produce an antimony gold concentrate. Adds another strategic layer.
Very interesting project. Okay, from gold and antimony, let's move to silver. Our next breaking news is from Argenta Silver Corp. Trading symbols, AGAG on the TSX.V, AGAGF on the OTCQB. Headline, Argenta Silver unveils major high-grade discovery at El Cuevar project in Argentina. Okay, major high-grade discovery. What are the numbers?
Yeah, and these numbers really pop. The initial drill results from El Cuevar, pretty exceptional. Get this. Hole QVD 410 hit 533 grams per ton silver over 20.2 meters.
533 over 20 meters. That's very strong.
It is. And within that, there was a 1 meter section grading a staggering 3,549 grams per ton silver.
Over 3.5 kilos of silver in a ton. Wow.
Incredible, right? And it wasn't just one hole. QVD 409 also showed 309 grams per ton silver over 26.8 meters. Again, context. A typical silver mine might run 50 to 200 grams per ton. So these grades over these widths really points to a robust system.
No kidding. Those are fantastic drill hits. What about near the surface? Any indication there?
Yes, and that's another key part of the story, surface sampling. Even more eye-popping results came back. One grab sample actually exceeded the lab's detection limit. It was over 20,000 grams per ton silver.
It broke the machine.
Basically, they couldn't get an exact number. It was so high. Other samples hit 16,145 grams per ton and 6,004 grams per ton.
Okay, that surface potential sounds significant too. Could mean easier, cheaper mining maybe.
Potentially, yes. High-grade near surface could lend itself to open pit methods in some areas, which are generally lower cost. It really suggests widespread potential.
So Definitely shaping up as a very promising silver project, and I recall something about historical data. A strategic advantage.
Yes, this is quite unique. They have access to over 66,000 meters of historical drill core. Crucially, this core was never fully logged, cut, or sampled for silver in the past.
So a treasure trove of data just waiting.
Exactly. It allows for potentially very low-cost resource expansion. They can analyze this existing core instead of drilling brand new, expensive holes everywhere.
Smart. Leverage what you already have.
They've already started sampling it, and it's confirming the strategy, returning meaningful intercepts. Plus, they've found new silver and gold anomalies from soil and rock sampling elsewhere on the property. The CEO, Joaquin Marias, he called it a promising project with standout grades, and it's easy to see why.
A lot going on at El Cuevar then. Okay, finally, let's wrap up our breaking news segment. We're looking at Lion One Metals Limited, symbols, LIO on the TSX.V, LOMLF on the OTCQX, their latest. Lion One Metals reports record quarter at Fiji Gold Mine with $16.03 in revenue and operational milestones. Record revenues, see $16.3 million. That sounds like they're really hitting their stride operationally.
It certainly signals strong progress. That's $16.3 million in revenue for the quarter ending June 30th. That's a 24% jump from the previous quarter, and compared to last year, a 77% increase.
Big increases.
Yeah, really significant growth. And operationally, they hit an all-time high for mill utilization, 96%. That means the plant is running consistently, efficiently. They also completed a record 1,503 meters of underground development in the quarter.
Okay, that development is key, right? Getting access to more ore.
Absolutely. More development opens up more mining areas, and significantly, their first shrinkage stope is now in production.
Shrinkage stope, what does that mean practically?
It's a highly efficient underground mining method. It allows for continuous high volume ore extraction. It basically signals a step change in their mining scale, moving towards full production rates.
Got it. So more efficient, higher volume, and are they hitting good grades in these new areas?
That's the other exciting part. Early drilling results from this new stope area, they include some really striking intercepts, things like 142.66 grams per ton gold over 2.2 meters.
Wow.
And even 489.52 grams per ton gold over zero point 0.4 meters.
Almost 500 grams. That's bonanza grade.
Phenomenal grades, much higher than the mine's current average. It really points towards potentially stronger results and higher overall production as they mine these zones more fully.
Okay, so these milestones definitely signal a pivotal phase. Sounds like they're moving from that sort of pilot scale towards full operation in Fiji.
Exactly. They're leveraging the infrastructure they've built and tapping into this high-grade asset. The CEO, Ian Berzins, he specifically mentioned progress in gold recoveries and that accelerated underground development. He anticipates stronger results now that the stope is coming online. It really feels like they're moving from ramp up to consistent execution.
Good to hear. Even with challenges like ventilation they mentioned.
Yeah, they noted the head grade was a bit lower this quarter because ventilation temporarily restricted access to some high-grade zones. But they say that's resolved now. So with access restored, grades should improve significantly. Plus, having their own assay lab and drill fleet on site, that helps control costs and speed up decision-making. Huge advantage.
All right. Well, what an incredible deep dive into today's small cap breaking news. We've covered a lot of ground major discoveries in lithium, uranium, gold, silver, plus some really compelling financial and operational results.
Yeah, it's been quite a run-through. And while these headlines are definitely exciting, what these updates really underscore is just how dynamic the small cap market is. It's always evolving. So for you, the listener, the astute learner, it's not just about reading that headline, right? It's about understanding the critical data points, the grades, the NTVs, the operational metrics that actually drive value. And it's about recognizing there's always an opportunity to dig deeper, to look beyond that initial announcement. These companies aren't just digging stuff out of the ground. They're genuinely shaping parts of our future energy and technology supply chains. Makes you wonder what other hidden gems or, significant shifts might be unfolding right now just under the radar, and how can you spot them by really looking at the data?
Great point. Always more to uncover. For more breaking small cap news and exclusive interviews, be sure to follow Agoracom on our podcast. Stay tuned and stay invested.